thank you for joining us, I should say, again this morning. I appreciate you're all very busy people and have businesses to run. I think the turnout this morning is a demonstration of not only the extent that METS represents in our economy, or the size that METS represent in our economy, but also the opportunity that it represents for growth. Again, I want to thank you for making the time this morning, and I'm certain that you'll be pleased with what you hear. I wanted to give you a bit of a quick introduction into how we came up with the METS Supply Chain Development Program, a bit of a brief history, give you a bit of a snapshot of some of the things you may already be aware of, but also in there's a bit of a message and a bit of a reality check that we need to also be aware of, and I guess we need to focus on in order to develop our growth prospects. The usual disclaimer, I can assure you we've taken as much care as possible in preparing the presentation. For those of you that don't know me, my name is Paul Goiak. As you've heard, I'm Director Industry Development within the Department of State Development. Overall, the responsibilities for my team is to develop supply chain capabilities in minerals, energy, information and communication technologies, and to some extent we work very closely with Defence SA on defence supply chains. We're responsible for administration of economic development programs aimed at growing South Australian supply chain capability and capacity. And my sector experience, as previously mentioned, is automotive, ophthalmics, which is lens manufacture, uranium mining, ICT wholesale distribution, and now I'm in the public service. I'm very proud to say I have a dedicated team who helps on a variety of functions and have a very, very good industry knowledge. I'll get them to put up their hand as I mention their names because I would like you to know who they are. It's very important that you know who they are. So Bettina Venner, I think, is over there. She manages the Industry Capability Network. Susan Andrews at the back there is our ICT consultant. Meryl Kirk is our administrator for the PACE program and our internal administrator. Lachlan Crowe down the front here is the Mining Industry Participation Office manager. Gavin Asikas joined us yesterday and is very new to us and will be supporting our functions in mining development going forward. Please make sure you introduce yourself to him. And is Paola here? No, Paola's not here yet. Okay, well, I'll miss Paola out. So just the message really is that those people are here to support you. Okay, they're there as an assistance to your business. So what am I going to cover? Well, the areas that I'd like to go over are why are METS so important, the success drivers and constraints for METS companies, the role of government, where is the opportunity for growth, and why the PACE Supply Chain Development Program. I wanted to kick off just by showing a bit of a slide that illustrates the value chain of a typical mining operation. And in doing this, I'm assuming that there are people in the audience that are first-timers to mining. So I know many of you know this back to front, but for those of you that don't, there is a fundamental order that most minerals or resource projects follows, and that is an exploration phase, some sort of feasibility analysis, a development and construction phase, and a rehabilitation phase. And the important point to note is that METS service providers supply right across that value chain. They're a very mixed lot that typically represents a diverse set of service providers, including specialised suppliers such as geophysical surveyors, all the way through to traditional fabricators. Now, one of the important points with the value chain for mining projects is that you may well be a Tier 1 supplier in the exploration phase and be a Tier 3 or Tier 4 supplier in the development phase. So knowing where you fit in the tiering structure for the particular phase of the mine life that you're targeting is very important to identify up front. So it's one of those messages that often gets overlooked. You're not always in the tiering level that you might think you are. Just a very couple of quick slides to give you an idea of some of the local businesses that sit in the METS sector in South Australia. I'm sure you know many of these names, so I'm not going to read through them, but some very familiar names there. And on the next slide, really just to give you a picture of the diversity of the sector. The other important point I wanted to make this morning was that METS is supported both at a state and federal level. So from a state government perspective, we have 10 economic priorities, and the top one of those priorities, or priority number 1, is developing our mineral and energy and renewable assets. As part of that priority, we have a dedicated strategy to develop mining equipment and technology suppliers. So we have a dedicated strategy to doing that, and this PACE Supply Chain Development Program is part of that. At a federal level, the federal government has identified 5 sectors that are growth prospects, okay, or major sources of future industrial growth for Australia. And METS features in those 5 growth sectors as well. So the message here is that your sector has support at both a state and federal level, and we're trying to leverage both of those systems in order to deliver you the best programs and support that we can. Before I get into too much more detail, the other thing I wanted to provide as a bit of a backdrop is that South Australia has a lot of comparative advantage in its mineral and energy resources. I often am surprised at how few people know that 69% of our known copper resources in Australia reside in South Australia, that 28% of the known gold resources reside here, that 81% of known uranium deposits reside in South Australia. They're very important figures from my perspective for one important reason, and that is that if you're going to develop business capabilities, you might as well develop capabilities in areas we have a comparative advantage, and turning that comparative advantage into a competitive advantage, okay? I don't think there's much use in developing technologies in diamond mining if the state doesn't have any diamond mines, okay? You can do it, but you're going to find it a bit easier to develop your business if there are some core comparative advantages in the state that you can leverage and then take internationally. So why do we want to grow METS? Well, the use of bulk commodities will continue to grow as the globe continues to urbanise. This underpins a whole service industry that is truly global in nature. From the state's perspective, METS does the following. Firstly, the diverse nature of METS grows economic complexity within South Australia and reduces reliance on our more traditional sources of income by building businesses that have the potential to value add. Secondly, it's a technology-driven sector, which means long-term jobs. Thirdly, METS services a global market, so the jobs and capabilities remain long after our local resources are exhausted. And fourthly, it's complementary to our foundation and future commodity-based industries, as I've mentioned, oil and gas, copper, graphite, and uranium. In 2015, we commissioned a special report in order to understand 2 fundamental attributes about METS. The first is, what is their economic contribution? And we did that to determine a baseline. A baseline so we understood the relative movement of the sector as the years passed. The second attribute we wanted to understand was, what are the behaviours of successful METS companies? In essence, we wanted to confirm our own observations. The figures you see on the screen are a high-level summary and confirm a couple of key points. Roughly, for every person employed directly by a mine, there is 1 person employed in a related service sector. The gross state product contribution of METS is about 2.6%, which is significant and certainly more than previously thought. And the third point is that South Australia is a long way behind the national average for METS contribution to gross domestic product, and there is significant opportunity for growth. The report also provided some qualitative information about behaviours of successful METS companies. If we were to roll up these qualitative behaviours into a few key messages or key points or success factors, the report found that being globally competitive is the single biggest contributor to growth and sustainability. So what does it take to become globally competitive? What are the success factors? Well, at this point, it pays to spend a moment reflecting on the factors that drive minerals and energy companies to develop commodities in the first place. In essence, those companies are seeking to generate profit by leveraging two parameters: foreign exchange rate and commodity price. Many of the factors that influence those two parameters are often out of our control, but the important point to note is how well resource companies are able to leverage those two parameters is often dependent on how well they can optimise their operations. And that is something you can influence. Remembering that the two drivers of profit are revenue and cost should remind us that the opportunity for METS lies in the ability to either improve output or revenue or reduce inputs or costs. At the most rudimentary level, we found that all successful METS companies were able to influence these factors by connecting and building relationships with target clients, understanding their businesses and issues, and finally providing innovative solutions to their problems. Now, this may sound easy, but it's not, especially in an environment such as South Australia's, where a large part of the economy comprises small to medium companies, and the economy is transitioning out of automotive manufacture at the same time as it's experiencing a cyclical downturn in commodity prices. This has the effect of lower exposure to international supply chains, resulting in a reduced capacity to develop global competitiveness, increased difficulty in identifying a customer's key value drivers, lower exposure to leading technologies, thereby compromising the capacity to develop and commercialise new goods and services, a reduced capacity to establish critical relationships in target markets, and increased difficulty for research institutions to interact with industry and attract the best and brightest minds. This rationale provides a compelling impetus for ensuring new business capabilities within South Australia are assisted during a time of transition and represents a valid role for government. It's also important to note that our track record of looking to the world for opportunities is not as good as it should be. There's evidence to suggest we are not good at looking at external markets for new opportunities. This slide summarises some recent findings from the 2015 OSMINE National Survey of METS. Just over a third of South Australian respondents stated they're currently exporting, which is less than half of that of Queensland and significantly lower than the national average of 66%. When asked where South Australian companies saw growth opportunities, only 20% stated exports, as opposed to 58% in Queensland and 42% nationally. South Australian companies, however, look to industry collaboration and partnership for growth, which is a vital first step. So what's the role of government within this environment? Well, the answer is government needs to, in my view, assist businesses to get over the hurdles we've just covered, namely help companies access new markets and understand the value drivers in those markets, facilitate collaboration with research institutions, and industry, provide a structured approach that allows South Australian SMEs to easily take part in programs, reducing the time required to develop and commercialise new goods and services by supporting structured collaboration frameworks between large corporates, research providers, and SMEs. Those of you familiar with the work my team does would already be aware of the success of the Mining and Petroleum Services Centre of Excellence. Its sole function is aimed at the top one of those success factors there, which is providing innovative solutions. We've had numerous success stories, including the ImpTech Crusher, LabSA's proppant testing facility, the IPAC's remote monitoring facility, the Tonsley Oil and Gas Training Facility, and development of new predictive analytics curriculum within the University of South Australia. In fact, the list goes on. And those of you that happen to receive the SACOME Journal will see a great new feature article in that coming up in the next month if you get your hands on a copy. But what you'll be hearing about this morning is how we're supporting the other part of the success formula, by helping you to connect and build relationships and understand the issues. This underpins the core objective of the PACE Supply Chain Development Program. So where are the opportunities? This chart provides a contrast between the value of projects in development phase in South Australia, Australia, and globally. The takeaway from the graph is simple. If we expect to sit and wait for opportunities to arise solely from within South Australia, we could not only be waiting a long time, but the ultimate size of the prize may be a lot smaller than what is possible in external markets. The other important point to acknowledge is that we all recognise the resources sector is in a downturn at present, but that does not mean there are no opportunities for suppliers to this sector, particularly nimble, efficient, tech-savvy ones who are prepared to tap external markets. A perfect example of this is the fact that lower growth and reduced profits in China's mining industry have put a spotlight on increased efficiency and productivity. Never before has the demand from Chinese industry and government been so high for innovative mining equipment, technologies and services. So much so that the Chinese government will prioritise support in areas such as drilling deeper to maximise extraction efforts, energy-saving equipment, environmental protection solutions, wastewater treatment, airborne sulphur dioxide reduction, recycling equipment, environmental protection, mining rescue equipment, rehabilitation and closed mine site land contamination remediation services, and the list goes on. Having recently travelled to China, I can vouch for the fact that the opportunities are definitely there for those who are prepared to spend the time and money to understand the market and develop the right relationships. From an Australian perspective, most people are familiar with the decline in productivity of the Australian mining sector over the past decade. This is echoed around the world. However, mining is now topping the list in productivity growth, led mainly by labour productivity. What is evident, however, is that whilst the significant rationalisation of labour into the industry may have started a return to productivity, it has not, and is unlikely to, return us to the pre-boom levels. We need to find productivity in the technology we deploy, our procedures, our mine plans, and importantly, our supply chains. So why the PACE Supply Chain Development Program? At its core, the PACE Supply Chain Development Program will help you develop the relationships and understand the value drivers, and it will help you transition from other sectors into the resources sector. It's delivered by industry experts and, as I've mentioned, supported very much by the state government. I'm not going to get into the detail of the program. As Phil mentioned, there are 3 stages to it. Essentially, the identify stage targets new entrants to the METS sector, as well as METS companies that are looking to expand into global markets. The develop phase is a very, very important phase in my view, and it develops the industry-specific business development, marketing and sales advice and information on business model innovation, and that is a crucial area when you're looking to expand in your business. And the 3rd phase, the extend phase, is for companies looking to expand into new geographical markets. So as a final word, don't believe me on any of this. For context, the Toronto Stock Exchange is the primary stock exchange globally for exploration companies and junior miners. They are effective at raising capital for start-up miners and are now seemingly transferring this ability effectively to the technology and information space. Some points of interest. The technology and innovation sectors have been the fastest growing sectors on the Toronto Stock Exchange since the start of 2013. The technology and innovation companies listed on the Toronto Stock Exchange are now collectively valued at $250 billion. That's more than the aggregate value of the mining sector on that exchange. More than 50 new technology and innovation companies have gone public on the TSX since the start of 2014. Technology and innovation companies listed on the TSX have raised nearly $12 billion in equity capital since the start of 2014. The TSX Capped Information Technology Index, which serves as a barometer for the sector, rose 38% in the last year and a half, in contrast with other indices in the United States, which rose 19% over the same period. The message is very clear. Money is flowing to METS in other countries. So don't miss this opportunity to get on board. This is a first for South Australian industry and an opportunity for you to place your future in your own hands. Again, thank you very much for coming in this morning, and please, if you'd like to have a chat later on, morning tea, feel free to come up and we can discuss some of the points that were in the presentation if you like. Thank you very much.